Good evening, everyone. Time for another silver update. You are looking at the daily chart of silver, and I've outlined the current massive ascending flag formation that we're looking at. You can see that we're after the Fed announcement today of what could be termed nothing other than an epic failure of their announcement. The stock market immediately tanked 300 points after Bernanke opened his mouth. So it's kind of becoming a pattern. We've already seen that with Obama opening his mouth, the markets tank. Now that Bernanke is opening his mouth and the markets are tanking, we're kind of completing this pattern of votes of no confidence in the market with these people speaking who just have nothing to offer but more of the same, which is more debt to cure a problem of too much debt. So we pretty much know where that thing is going. Now this is important because I've covered my last bet that the paper is going to be taken down. I want to emphasize the fact that we're really just talking about an illusory market here. We're not talking about a real market. We're talking about a takedown in the price of the paper market. So will physical crash through this line? I think my bet is there's an 80% chance it will, maybe a 20% chance it will bounce and rally. If we pull into the nearby, we can see that on the minute chart, let's pull out to 5 minutes, we can see with the Bernanke announcement and the reaction, we really went down hard, and we're testing some of these lines here. So it's up in the air as to which direction this thing is going to ultimately break to. And of course there are always fake outs, but my bet is there's an 80% chance we're going to go down, we're going to find a bottom, and then we're going to rally. So of course I'm still hoping to take some quick paper profits on my short-term short and then switch around and go long some physical with the profits. I may be wrong and I may be proven wrong. This is our critical point here of our crossing of the zero line. We're still crossing. We're still at a key crossover point of the zero line because you can see the blue has still not crossed below while the red has. So we're right at the make or break point. We're waiting to see where the confirmation goes. We may even get a confirmation tonight. Now I want to take you over to an excellent article that is on Zero Hedge. This is just a blockbuster article. It's by Chris Powell, and he's the Secretary Treasurer of the Gold Antitrust Action Committee. Now before I go into this, and it mentions Adrian Douglas. If you remember, Adrian Douglas was the one who brought in Andrew Maguire, and a lot of the doubters who said Andrew Maguire doesn't exist, we've proven recently that he does exist. A lot of people have posted videos, so that's not important now. But what we look at here with gold, and GATA has been on this mission for quite a while to prove the gold suppression. Whatever we say of gold, we have to admit that it's tenfold the case for silver. So even though the facts that are covered in this article are startling, the facts about silver are 10 times more startling. And I will say that GATA will not even touch the silver story. So you can draw your own conclusions from that. But let's start reading here. I can't read the whole thing, but it's a fascinating article. As gold price suppression grows more brazen, maybe Asia will defeat it. The speaker following me, George Clooney, will be able to tell you what it's like to be handsome, talented, rich, and famous. I could tell you what it's like not to be. But instead, the conference has asked me to talk about gold, which at least might make you rich or help you preserve some of whatever you've got. This opportunity is full of risk because the gold market long has been manipulated by Western central banks to restrain the gold price. The Western central banks are slowly losing control of the market, but they are not giving up easily. Why do central banks, Western central banks, manipulate the gold market? The gold market is manipulated because despite the Federal Reserve Chairman Ben Bernanke's insistence to Congress a few weeks ago that gold is not money, just a tradition, gold is indeed a currency that competes brutally with government-issued currencies and helps determine not only the value of those currencies, but also interest rates and the value of government bonds. Gold's competition with currencies was documented in an academic study published in June of 1988 in the Journal of Political Economy, written by Harvard economics professor Lawrence Summers and University of Michigan economics professor Robert Barsky. Summers and Barsky found that in a free market, there is an inverse relationship between the price of gold and the real rate of interest. The Summers and Barsky study implied that if governments could get control of the gold price, they could also get control of interest rates. Of course, Summers went on to become Deputy U.S. Treasury Secretary and then Treasury Secretary, positions in which skill in rigging markets is a great asset. Exactly how is the gold price rigged and by whom? It has been rigged openly through outright sales of gold by central banks, as it was rigged openly in the 1960s by the group of Western central banks that operated what became known as the London Gold Pool. And following the gold pool's collapse in 1968, rigged both openly and surreptitiously through central bank sales and the lending of gold, and by bullion bank short positions and derivatives that are supported by access to Western central bank gold. The Gold Antitrust Action Committee has documented this rigging from official sources whose admissions are compiled in the documentation section of our internet site, and there's a great link there. I encourage you to follow that. That is, the gold price suppression scheme is not what it is sometimes disparaged as being conspiracy theory. Rather, it is a matter of the most extensive public record, at least for those who want to look at the record. These records include public statement by Federal Reserve officials, officials of other Western central banks and the International Monetary Fund, declassified Central Intelligence Agency memoranda, the minutes of the Federal Reserve Open Market Committee, filings and statements in 3 gold price suppression lawsuits in the United States. These records also include declassified or leaked U.S. State Department cables, statistical studies done by market researchers like Adrian Douglas in the United States and Dmitry Speck in Germany, and testimony at the hearing about precious metals markets that was held on March 25, 2010 by the U.S. Commodity Futures Trading Commission. That hearing produced testimony that led to the filing of massive silver price rigging lawsuits against J.P. Morgan Chase. The revised complaint against J.P. Morgan Chase, filed last week in the U.S. District Court for the Southern District of New York, contains pages and pages of extraordinarily specific detail identifying trades, traders, and dates. And there's a link for that. An especially incriminating document remains on the internet site of the Federal Reserve Bank of St. Louis. It is a detailed plan from April 1961, discovered in the archive of the Fed's longest-serving chairman, William McChesney Martin, for surreptitiously rigging currency and gold markets worldwide, a plan that went so far as to propose the alteration, falsification, or withdrawal from publication of U.S. governmental financial reports that otherwise would be incriminating, and he gives links for that. My organization possesses and has posted these records on the internet, and I would welcome an opportunity to examine and discuss them in detail, document by document, with any doubters in a public forum. But the official record of gold price suppression is not merely historical. Thanks to my organization's work, it is very contemporary as well. 2 years ago, using the Federal Freedom of Information Act, the Gold Antitrust Action Committee asked the Federal Reserve to provide access to its gold records, particularly its records involving gold swaps. Gold swaps are trades of gold between central banks, enabling one central bank to intervene in the gold market at the behest of another, keeping the other central bank's fingerprints off the intervention. Gold swaps are a primary mechanism of the gold price suppression scheme. While the Fed refused to give us access to its gold records, in adjudicating our request internally, the Fed did make, perhaps inadvertently, a sensational disclosure. On September 17, 2009, the member of the Fed's Board of Governors who was acting as judge for our request, Kevin M. Warsh, wrote a letter to our GATA lawyer, William Olson of Vienna, Virginia, confirming the Fed's denial of access. Among the records being withheld from us, Warsh disclosed, were records about the Fed's gold swap arrangements with foreign banks, which he wrote is not the type of information that is customarily disclosed to the public. This admission that the Fed has gold swap arrangements with foreign banks plainly contradicted previous statements by the Fed that it was not involved in the gold market in any way. As GATA was not willing to let Fed Governor Warsh's letter be the last word on access to the Fed's gold records, and it goes on. It's too long, so I'm going to jump down to get exactly to the issue of how these gold swap arrangements work and how we're looking at a fractional reserve system of gold. So he goes into the Bundesbank and how the Bundesbank has also admitted, although they can't admit it all, but they have admitted some of the issues regarding how they do their gold swaps. He talks about China, how China has lied repeatedly about how much gold is accumulating, and it only comes out and admits later that it's accumulated a bunch of gold that it never admitted, and then it says it's not accumulating anymore. Of course, then it goes on to accumulate a lot more. So China is accumulating a lot more gold than it's admitting to. Saudi Arabia is as well accumulating a lot of gold. Now he goes into the diplomatic cables. I'll read that briefly. Thanks to diplomatic cables from U.S. Embassy in Beijing to the State Department in Washington, cables obtained by WikiLeaks, and I don't have time to go into the WikiLeaks story, which is suspicious of itself, so I don't lend a lot of credence to WikiLeaks cables because of Julian Assange and some of his questionable connections, background, etc. So that's not worth too much in my mind. But anyway, he says the cables obtained by WikiLeaks organization and published this month, we now know that the Chinese government agrees with GATA that Western central banks suppress the price of gold to support their own currencies. And then he goes into those cables. Because central banks know that gold, far from being a quaint antique, is actually the determinant of the value of all other currencies, the true disposition of national gold reserves has become a secret more sensitive than the disposition of nuclear weapons. For gold is a weapon just as powerful, a weapon crucial to the currency wars that flare up every few years, like the currency war that is raging now. That is, gold is the secret knowledge of the financial universe. And while nuclear weapons can be used for blackmail, currency market rigging is a far more effective mechanism for looting the world. Many of you have heard about the looting of Europe undertaken by the Nazi German occupation in World War II. And he goes into the Nazis, how the Nazis controlled gold. And I'm not going to go into that. You can read that. He also talks about Russia. The gold price suppression scheme, a dollar support scheme, can be exposed by any serious questioning of central bankers. My organization has found that central bankers refuse to answer the most ordinary specific questions about gold. But who else will ask the questions? The scheme survives in large part because of negligent journalism about gold. The scheme has lasted so long because with the assistance of Western central banks, the major Western bullion banks, investment houses that deal in gold have developed, and this is the key point, people, listen to this, they have developed a fractional reserve gold banking system. They realized that they could sell a lot more gold than they really have because many major gold buyers, financial institutions, and large investors never take delivery of their metal. These investors accept depository receipts instead. The fractional reserve nature of the bullion banking system was confirmed in detail last year's in last year's hearing of the U.S. Commodity Futures Trading Commission. He goes into that. So I wanted to emphasize that key point that the gold system is a fractional gold system. So the majority is held in the Anglo-American Empire in New York and London, and the other countries that have gold reserves actually hold them in another country. That is beginning to break down as the Chinese take delivery, the Russians take delivery, the Venezuelans take delivery, and more people countries begin to demand delivery of their physical gold. So the article goes on. It's an excellent article. It's fantastic. And he also talks a little bit about silver, the silver manipulation. Like I said before, whatever you say about gold, you can say tenfold for silver. So I encourage you to read this article. It's excellent. Read all the comments. These are the people who really are on the cutting edge. They know what they're talking about. Now, I wanted to put this in a real perspective so you can see just exactly what we're talking about. So I'm going to start off by taking you over to a article on howstuffworks.com that is a question that someone asked of, if you took all the gold in the world and put it in one place, how much would there be? And he goes into this. I'm not going to read this, but the estimate is roughly 10 billion ounces, which I think is pretty accurate of what has been mined in the history of the world. If we go by the earth crust ratio for silver, we need to multiply by anywhere from a factor of 10 to 16. So we're looking at anywhere from 100 billion to 160 billion ounces of silver. Now, for a lot of reasons that I don't have time to go into here, I believe that the actual ratio is 1/10. I believe that the deliverable gold is near around that 10 billion, while the deliverable silver is roughly 1 billion. So I think it's flipped because of the use of silver in industrial uses, and the low price has caused it to be discarded and unmined. If you want to understand that concept, you can watch my Office series on unmining of silver and why the low price is why it's causing silver to be unmined, or in other words, it's causing silver to be discarded in unrecoverable amounts back into the earth. So be that as it may, this article tells us that we're looking at all of this gold that's ever been mined is roughly 10 billion ounces. This 10 billion ounces of gold would fit into a cube roughly 25 meters, about 82 feet on a side. Now, I went ahead and took this 82 feet on a side and multiplied it out. I'm not going to bring up my calculator, but you can trust me on this. It comes to roughly 6,000 or so square feet. Now, that's going to be 6,000 square feet. That's going to be the base, 6,000 by 6,000, and that's going to be 6,000 height of the cube as well. So we're talking about a cube that's roughly 6,000 square feet, and then the height. So it takes up the space of roughly 1/3 of the Washington Monument, and I've tried to find a structure that is 82 feet wide by 82 feet long by 82 feet high. That's not exactly easy to do, so I compromised and I went and found something that was 12,000 or so, but not as high. So what I did was I went and searched on the internet to find something that was roughly that size. It may not be correct. You can research it for yourself, but the one I seized upon was Puff Daddy's Mansion, which is listed here in this public article. I decided to choose a public listing of a house that had something like that. We can see here that Puff Daddy's Mansion in Alpine, New Jersey was listed for $13.5 million. It's 17,000 square feet, so for it to reach the 6,000 figure that I came across by multiplying it needs to be as high as it is wide. And of course, no house is that, so I went with something that was 2 to 3 times in the width and depth, but the height wasn't quite as high. So this is just a guesstimation, but this mansion here that Puff Daddy owns and is for sale, just this area here, you could take all of the gold that has been mined in the history of the entire world and put it inside this building and hide it there, and there would be no other gold above ground. So just to show you how incredible that amount is, and others have talked about a standard tennis court. You can also use that. This tennis court is very good to show in comparison. It is, the other figure I've heard is that if you take a tennis court and you go as high as this width in height, you could place all the gold that has ever been mined in the history of the world right here. So you can see that if you wanted to bury that, for example, you'd only have to go down this much under the ground, this width right here. You could bury all the gold in the entire world on Puff Daddy's estate here, right underneath his tennis court, and you'd only have to go this deep. So let's go to Google Earth, and I wanted to show you this just so you can see how dramatic this fact really is. So we've got Puff Daddy's mansion, and we're going to zoom in. And there it is right there. This is reversed, so don't get confused. It's just Google Earth on the maps. There's the tennis court. There's where you could bury all the gold that has ever been mined in the history of the world. Remember, silver, in my opinion, is going to be 1/10 of that. So take a little corner here. And this is how much earth there is compared to gold. So that gives you an idea of how much gold is actually on this earth. That gives you an idea of the games that the bankers are playing with their fractional reserve gold system. They're selling gold they don't have. They're selling silver they don't have, because the amount of gold and the amount of silver on the earth is so tiny that it would fit in the size of this tennis court. And we'll talk to you next time.